Curious about what taxes you'll have to pay when you sell your property? Well, you are in the right place. In this video, we're going to talk about capital gains tax that is incurred by selling real estate. We're going to go through if you have to pay, how much you have to pay, and if you can get around it. Well, let's roll. Okay, real quick, if you've been watching this channel for a while, you know I'm a licensed realtor in the state of Colorado. I would love to be a resource for you for any questions you have or any real estate needs whatsoever. Please just reach out. I love it when people reach out from the YouTube channel. I will put my contact info below. Okay, so capital gains tax, and will you have to pay it on the sale of your home? First of all, for most people, the answer is no. What is capital gains tax? Well, it's the tax you have to pay on any gains from your investment. So any profit that was made from when you bought the investment to when you sold it, that would be taxable under capital gains tax. But in real estate, there is one enormous exemption for capital gains tax. If you are selling your primary residence, the home you live in, then you will have an exception up to $250,000 of capital gains for one individual, or if you're filing jointly as a married couple, up to $500,000, up to $500,000. Meaning, if you're a married couple and you sell your home and you make up to $500,000 on that sale, you do not pay a penny in capital gains tax. If that is you and that's all you needed, well then I'm happy to be of service and you can go away happy. But here's the deal, this only applies to your primary residence, which means the place you live most of the time. And what is a primary residence? What makes it a primary residence? Well, first of all, it's where you live, it's where your mail goes, it's where your car is registered, it's where you're registered to vote, all that stuff. But also you have to have lived there for at least 2 of the last 5 years. So what does that mean? Well, it means, first of all, you have to have lived in the home for at least 2 years. So if you buy a place and then sell it, let's say in a year, and have capital gains there, well, you will not qualify for that exemption. You will have to pay those capital gains taxes because it has not been 2 years. But it doesn't have to be 2 consecutive years. It has to be 2 years total. But let's say you've owned the home for 10 years. Well, as long as you've made it your primary residence for 2 of the last 5 years, somewhere in there, say 6 months here, 6 months there, whatever, well, and that adds up to 2 of the last 5 years, that's good, you still qualify. So basically it had to have been your primary residence at least some of the time recently. Okay, some of you are watching this and saying, okay, Sam, that's great, but I don't care about that because I'm not thinking about selling a primary residence. I'm gonna sell an investment property. This thing's been a rental for years and I'm not moving back into it, so forget about that. What do I do there? Well, in this case, if you are selling an investment property, you will be subject to capital gains tax on that sale. I know, boo, hiss, this is America. Can I get around that tax somehow? Well, maybe, but before we talk about that, I want to talk about the difference in short-term and long-term capital gains tax because this often gets confused and sometimes people think if they're paying capital gains tax, they're going to be paying more than they're actually going to pay. So the first rate is the short-term capital gains tax rate, and this applies generally if you've owned the home for 1 year or less. So that first scenario I was talking about where you just haven't owned it very long and for whatever reason you need to sell, a lot of the time this applies to house flippers where they're gonna buy it, fix it up, and then sell it quickly and try to make a lot of money. That case, the short-term capital gains tax rate will apply. What is that rate? Well, generally it's equivalent to your personal tax rate, your tax bracket. That's why it scares a lot of people because it's gonna be over 20%, a lot of the time over 25%, into the 30s and even the 40s depending on who you are. Yes, this is why people don't want to pay it. But that only applies in certain circumstances if you've owned the home for a year or less, a very short time. What if, like I was talking about before, you've owned this home for a decade and had it as a rental for a very long time and now you want to sell it? Well, in that case, the long-term capital gains rate will apply. In this case, it's less ominous. It depends. There are certain people who qualify for a 0% tax rate here, but in general, it's going to be taxed at either 15 or 20%, depending on your filing status. So still not great, especially if you're standing to make a whole lot of money on the sale of a home, but it's a lot better than 38% or something like that. This is where I say that these are just guidelines and I only know so much about this stuff and I'm definitely not an expert. So when making these decisions, you really should be talking to a CPA to get all the info. Now, among these tax rates, you still may qualify for an exemption where you don't have to pay the tax, and that's if you meet certain criteria. The IRS will classify an unforeseen life event. Some of those they will deem fit that you can be exempt from this tax. If you're part of a certain class, they will deem that also exempt from this. There's something called the IRS publication 523 that has all these exemptions, and you should look at that to see if you qualify for one of those. So Google IRS publication 523. A couple quick big examples are if the sale of the home is part of a divorce, that often qualifies for an exemption, or if you are a military service or Peace Corps personnel. In this case, the IRS supports the troops. Okay, you looked through this IRS publication 523, you went through them all, you still don't apply for any of these exemptions, but you still don't want to pay tax. I get it. Well, in that case, what are you going to do? You might want to look at a 1031 exchange. 1031 exchange, if you're an investor, you're probably familiar with it. This is a whole nother video that I haven't done, may do at some point, but it's a very, very popular tax, not loophole, but part of the tax code that will allow you to sell an investment property, roll those profits into another investment property without paying tax on them. It's also known as a like-kind exchange. And it's great because you can buy a new property with all these proceeds from this other property and not have to pay any tax. But it's not really a way to get out of paying taxes. It's just a way to defer the taxes, kind of kick that can down the road. But still, it's been very beneficial for a whole lot of people. So check out a 1031 exchange and again, talk to your tax person about that if this sounds like something that may benefit you. And really, that's the thing. We're just scratching the surface here. There's all kinds of tax benefits for homeownership and for investing in real estate. So if you're someone who's doing this as an investor, you really do need to have a good, close relationship with a financial advisor and a CPA to help make sure you know about all these benefits, all of these things where you can be getting tax breaks for owning this real estate. Homeownership in many ways is really a great way to reduce your tax burden across the board. And really, if you want to get out of paying taxes scot-free on an investment property, the best way to do it is just to move back into that home. Make that your primary residence at least part of the time to satisfy that 2-year out of the 5-year period. Then sell it, move back into the other place, and be on your merry way up to $500,000 for a couple or $250,000 for an individual, tax-free. If this was helpful, I'd love for you to give me a call. My goal is to be your go-to real estate resource in the Denver, Colorado area. Otherwise, check out some of these other videos on the channel. Love you for watching. Talk to you soon.